So Dave, a lot of home buyers, when they make that choice to take the leap, it's so exciting, and they talk with a lender, they are surprised at how much the lender says that they actually can qualify for. Sometimes it's way more, sometimes it's way less.
It's wild. It's a huge spectrum.
What's up with that?
You know, Katherine, I just think that most people walking around on the street just don't really understand the relationship that comes from borrowing versus how much money they make or how much debt they carry. They are surrounded by experiences in their life where it doesn't matter, right? They walk into an auto place to buy a Mercedes-Benz. They write some numbers down on an application and they get keys to a car and they walk out of there with a car payment that they are not remotely close to being able to afford, right? And so I see that. The lending institution, however, does not operate that. We've got a few more zeros on the loans that we're giving people, so there's a lot more attention that's put into the decisioning on whether to give somebody. So you're right, we see spectrums. Sometimes people say, oh, Dave, I'm not going to be able to qualify. And we run the numbers and then we're like, oh my God, you could buy literally any property in the Temecula Valley that you want. And then sometimes, you know, kind of people come in with a little strut in their step, like, I can buy whatever we want. And I'm like, dude, I'm not sure you could get me a cup of coffee downstairs, you know, and it is truly that wild from a spectrum standpoint. It really is.
That's interesting. So, I mean, it sounds like you mentioned about a Mercedes and you know, and that consumer confidence and everything. It sounds like their debt profile is pretty dang important.
Yeah, no doubt. So, you know, it's a lender's responsibility to make sure that we don't put a consumer in a position where they cannot make their mortgage payment.
I love that, because one of the things I say to our clients is, I want you to own the home. I don't want the home to own you.
I love it. When I say it's our responsibility, there's teeth on that, Katherine. Like, lenders can have the ultimate responsibility and can be sued because they made an irresponsible decision to loan somebody money. Did you know that?
I did not, and I'm very glad to hear that.
Me too. It all happened after the big 2010 Dodd-Frank Act. There was a provision built into it that said, hey, lender, you better be responsible in the way that you are calculating income and debt and the analysis of their approval. Otherwise, you could have a financial penalty to pay on this thing.
Wow.
Yeah. So, you know, why is debt important? Like, our sole goal is to make sure that the prospective homeowner is able to pay back that mortgage payment. Of course, there's a lot of unforeseen things that can happen in the future. There's job losses, companies close down. So we're not talking about those factors, right? But we're talking about, based on the way that the consistent receipt of income is today, how much can somebody buy? So
yeah, well, would you talk about, you're probably about to, would you talk about what debt you look at? Because maybe a first-time home buyer, they're thinking that they need to tell you how much they pay for their electricity bill and their gas bill and their, you know, how much they spend. Like, you're going to look at their bank account and go, oh, well, you go to Target and Chili's and this, that, and the other. What are the actual things that you look at?
Yeah, so we're looking at the specific credit trade lines that are attached to the borrower's consumer credit report, right? So we're looking at auto loans, auto leases, student loans, credit cards, personal loans, timeshares, anything that you would basically find on your credit report. So we are not looking at your cell phone bill. Unless it became a collection and it now lives on your credit report. But we're not looking at how much you spend in gas. We are not looking at, you know, whether you're a top ramen or a filet mignon family, right? That's a big difference from a spend every single month.
Yes, it is.
And but we do leave a great allowance from their total income profile to account for those kinds of variables, right? But look, somebody who makes $200,000 and comes in and naturally thinks, well, hey, I make $200,000, I'm going to be able to qualify for a big payment. If that borrower has 2 car payments, an RV payment, a timeshare, $60,000 of student loans, and $30,000 of credit card debt,
ouch.
The borrower who makes $75,000 but doesn't have a car payment, pays off their credit cards every single month, and doesn't have any student loan debt, will be able to qualify for more home at $75,000 than the borrower with a $200,000 income.
And that's where, and I have literally met both of those people.
Sure.
Where that $75,000 person, they are so payment conscious too, and they qualify for so much more for a payment, but they are so conservative with their spending, which I love, by the way. And then you have that person that just overextends himself and lives paycheck to paycheck, even though their income is increased and increased and increased.
Yeah,
and it's just
keep borrowing more.
It's just a different perspective on life. And I think that's,
Yeah. And look, just to be very
profound.
clear, that's not a perspective that I judge in any way, right? It's
No.
different strokes for different folks, and I'm a supporter of that. But what we do, we do this Empower Hour that you love. I know you love that we do that with people. It's a time where we can really break it down to people, right? And we can let them know, and there's plenty of opportunity in that Empower Hour to really create some thoughtful questions.
Yes.
To ask them, right? When I'm looking at a borrower who has paid $1,500 of rent and total in savings, they have $8,000, and they are contemplating getting into a mortgage payment of $4,000 a month.
That's
right?
a big jump.
You have to ask yourself that thought-provoking question, how are you going to be able to do this, right? If somebody makes the decision, well, hey, Dave, look, we knew we weren't buying a house, so we decided to take these years and travel to Europe for 3 weeks a year, right? But that phase of our life is over now, so we're going to redirect.
Sure.
We're going to redirect those funds to home ownership because we're settling down, we're starting a family, we're doing all these things. There's nothing wrong with that.
Yeah,
right?
No.
As long as people are aware and understand that ultimately at the end of the day, these are real commitments, right? And so we just are able in that Empower Hour to have a platform to because it doesn't matter what our computer says. Sometimes I tell people, Katherine, they are qualified for XYZ, and they're like, I don't know what your computer's on, Dave, but let's cut that number in half. And that's usually that very wise, conservative. They don't have any consumer debt, right? They got big savings, big 401ks. They're redirecting money to an IRA or a Roth or whatever, right? Every single day. And that's the customer that generally needs to be more thought-provoking of what they're going to do and how much they're willing to kind of flex on that.
Yes.
Right? To deal with it. But if they don't have the data, they can't process that decision.
Yeah. Either way, though, I feel like consumer A or consumer B of those two examples that we gave, I love that you're able to guide them through and help them really see the best decision for them and help guide them to what they could realistically afford, what they would feel comfortable with, what would be the wisest decision for them, and help them do that analysis based on the data.
Yeah, no doubt, because the guidelines are the same for person A and person B, right? So based on their debt to income ratio, which is, by the way, Katherine, I have consumers tell me all the time, hey, Dave, I'm ready to get started, but just hold tight. I'm going to pay off this $15,000 of credit card debt first because I know you're not going to like that, right? And I always go, no, stop. We as lenders, believe it or not, there is no mechanism where we look at the total amount of outstanding debt that somebody has. Yeah. The only mechanism that we are looking at is the minimum monthly liability associated with that debt. Right? So if I see that $15,000 of credit card debt and associated with it, there's a $225 minimum monthly payment. That's the only number that myself or my underwriter or Fannie Mae or Freddie Mac or FHA or VA is concerned with. Now, you might say, Dave, I pay way more than that, $600, $700 a month, because I'm trying to pay off that debt.
Sure.
Good for you.
That's a totally different
different situation.
That's about being debt-free rather than qualification.
Yeah. So I always tell people, maybe paying off that debt is a good tool, because debt is actually a powerful tool. By going through a powerful analysis where we break down every car payment, every credit report, this actually becomes a powerful kind of arrow in our quiver, as you will, when it comes time to it, and they find homes that are just right out of their reach, but they check all their boxes.
Sure. And I can imagine too, from someone's perspective, they may want to get rid of that debt because, like, maybe that example you gave of where maybe their rent was really, really low and now their mortgage payment's going to be significantly higher.
Right.
And, they were traveling before, you gave that example, which, I've met people in that situation. Part of that, if they have that shrewdness, is they may not want to have that monthly payment at all. Right. That way they can give themselves room for that mortgage payment.
No doubt.
But it has nothing to do with qualification. Right. That's just with their personal lifestyle decision.
For sure. I'm always a fan. Right. I'm always a fan of that. And that's why we like to start the process, upwards of a year in advance for people, because we can be very strategic in the way that we advise them and follow them. And we can kind of be that accountability partner, right, throughout that year to come, every month having a check-in meeting and kind of evaluating where we're at. Oftentimes it's a great thing to do from a strategic standpoint, but it still makes sense to get like the data before making a emotional decision to do something like that,
yes,
that you can't necessarily unwind.
I love that you're almost pre-answering the question that I was going to ask you, which is, how does the consumer know where they stand? When should they, you and I always talk about that runway, but when, how, when, what, why, all of that.
Yeah, honestly, Katherine, it's as soon as possible. Like, as soon as home ownership becomes even like that little flickering thing in the back of the head that a husband, a wife, a family start, kind of dancing with at the dinner table, it's crazy to me, Katherine. People will spend more time deciding on where they're going to go to dinner Saturday night than in hunkering down and planning for the biggest financial decision that they have ever made for their life. It is so wild. It's mind-boggling to me. I always try to encourage people, work with people that there's no cost, no obligation, no negative impact to your credit report, but are willing to go all in as if you were buying a house tomorrow with that same ferocity, right?
Yeah.
Into helping you prepare, because from that preparation standpoint is how it goes from a flicker to a reality. And that's a beautiful process. It's crazy to me that people actually go through that journey themselves without data. They just decide, well, now's the time.
I agree. And, I have that same perspective too, because, sometimes I'll meet folks, maybe they come into one of our open houses and they've just started the thought process and they think, okay, let's go drive to the area and drive around. They haven't talked to the lender. They haven't talked to the realtor or anything yet. And there's this hesitancy because, and I could be misinterpreting, but I think sometimes the consumer will think that, well, if I have that conversation with them, I have to do something.
Yeah.
I have to work with them. I have to buy a house from them now. And I know that that's not true. And that that's not true from your standpoint, because you and I both handle this in a very similar way of, like you said, whether or not someone is buying a $350,000 home or a $3.5 million home, we treat them and that consultation with the same care, the same importance, and whether or not they will qualify or not, or whether they're doing it now or 3 years from now, each situation is the same. And it's amazing to see that person be empowered from that and to know where to go next. And
Absolutely.
Of course, the hope is if we do connect that we will work together, but it doesn't,
Yeah.
I think I can speak for you. You don't have that expectation. You really do. They do want to work with you in the end because your team is amazing, but that's not where you're coming from with them.
Our online reputation is something that we're really proud of, and it's new to me, Katherine, because I'm kind of like an old guy. I barely know how to log into my computer still to this day.
Yeah, you always struggle with our Google Drive.
I know, right? My teammates, though, over the last couple years have told me, "Hey, Dave, we're really getting taken care of out there in Google world, right?" And so I'd periodically go in there and check, and so we have over 115 reviews. We've never received anything less than a 5-star review. But I don't say that for a pat on the back. Believe it or not, I would say 20% of those reviews, Katherine, are for people that we did not approve for a loan.
Oh, I love that.
Right? And if and trust me, go on there and read them yourself. It's like, hey, we've been calling people. All we're getting is non-responsive people. They're not returning our phone call. We don't know where we're at. This team treated us with respect, with humility, with their time, right? And we may not be able to buy a house right now, but they left us with a strategic plan for the next 3, 6, 9, 12 months, whatever it may be, to make sure that home ownership can definitely be a part of our future. Those are my favorite reviews, Katherine.
Well, they reflect your core values.
They do. They do. I mean, we try to really differentiate, and sadly, that's a differentiator. It shouldn't be a different. It should be an absolute standard, as far as I'm concerned, with people who do what you do and people who do what I do.
I agree.
It's not, though. So that's why we lean into it so heavily as a value proposition, as kind of our unicorn. And it's not surprising to me that people feel compelled to go in and tell the world they were not able to get a loan, but still with a 5-star review from their experience with us. That's the kind of stuff that like makes you feel good when you're going to bed, you know?
Yeah, absolutely. I just want to encourage you, if you're watching this video, to know that, as Dave said, whether or not you resonate with that first buyer or that second buyer, we love you no matter what, and we're here to meet you where you're at. This is not about us.
No.
This is about you. And our goal is to give you the data, as from our data nerd here, and just the big picture to really see, okay, what is your vision? What is it you're trying to achieve? And how do we take the knowledge and experience that we have to empower you to be able to put a plan together to get you there? And I will tell you, I have chills right now. There is nothing more satisfying than getting a text from my client around Christmas time of saying, I woke up in my home this morning and I am so grateful for the fact that we live here and that we met you, and that it just being a part of their story and that they are living out that dream is just,
It's the best.
it's the best.
It's the best.
It's the best.
It really
So
is.
I'm going to stop being emotional. I'm
love
such a
it.
softie,
No,
but
don't ever stop being emotional. That's what makes you awesome.
oh my gosh, I just, if you resonate with that, or if you're just a numbers person, you're going to love this guy right here.
Data.
And that is cool too. Make sure to subscribe to our channel and get all this information we have for you every week. Get in touch with us, whether or not you are just starting the thought process or you are in fire mode. We're here to serve you.
Let's
and
go.
thank you for spending time with us. Thank you, Dave, as always.
Of course. Thank you, Katherine.